Hey, everybody, it is Emily Leach. I am super excited that we get this opportunity to spend some time talking about, learning about what this CARES Act really is and what it means for us as independent workers, freelancers, solopreneurs, whatever you call us, that's great. So MBO Partners has spent a whole bunch of time since last Friday digging into this, learning what it means, what the nuances are. There's new stuff, it sounds like, coming out every day. So we may do one or two more of these over the next couple of weeks, just to make sure that we're on top of it and we can keep these questions answered and get us in touch with money, loans, whatever it is we need to kind of bridge this gap. And I'm going to start out with bringing on McLean Robbins, that is a part of MBO Partners, and get started there. Hey
guys.
McLean.
Thanks, Emily, for having us today. Really appreciate it.
No problem.
I am McLean Robbins, the Senior Director of Marketing here at MBO Partners. And in just a few minutes, we're going to introduce our founder and executive chairman, Gene Zaino. Today, we want to help bring you a little bit more information about what the CARES Act is and what it means for independent workers. We know this is a hard time for you and your business. It's hard for every one of us here in the United States and across the world. And today, we want to take you through some of the key provisions of the CARES Act and what it means for you. We're also wanting to introduce caresforindependence.com. If you want to move to the next slide, Emily, I'll show that new website that we have spun up here. And before I get started and dive too far in, my legal team would like me to read a disclaimer about the information we're going to provide you today. And that is that this information provided does not constitute legal, tax, or financial advice. It does not take into account your particular circumstances, objectives, legal and financial situations, or needs. And before acting on any information, you should consider the appropriateness of this information provided for your situation in consultation with a professional advisor of your choosing. This is, and I can't stress this enough, a really rapidly changing and evolving area of the law, and it will be subject to different interpretation. We've seen that even over the days since Friday when this bill was released. But as I said, we have opened a new destination, and that's caresforindependence.com, that provides a lot of information about the new CARES Act bill. And I'd like to also just take a quick few minutes to give you some information about what MBO Partners is and the work that we do. At MBO Partners, our mission is to make it easier for enterprise organizations and top independent professionals, including freelancers, side giggers, et cetera, to work together. And we've been doing this for more than 20 years, leading the charge to keep the independent economy moving forward. We've built a unique dual-sided ecosystem and platform comprising many of the world's most prominent companies and in-demand professionals. We've been committed to advancing the next way of working for that entire time, and we know we're far from done, but initiatives like this really do give us hope that we can continue to help drive change on the ground, deliver innovative solutions that enable both organizations and talent like yourselves to thrive in a constantly evolving workplace. And so we, as I said, have spun up a new destination off of our website, caresforindependence.com, that outlines the key provisions of the CARES Act and how you can get these benefits that you need fast. And I'm going to bring on now Gene Zaino, who is our founder and executive chairman here, to talk a little bit more about some of the key provisions of the CARES Act. So welcome, Gene. I will give a very brief introduction that you founded MBO Partners. You're a passionate advocate for the independent workforce, a graduate of the Wharton School of Business, and have appeared on many national news outlets. And today here on Facebook Live with all of us independents.
Thank you, McLean and Emily. Thank you very much. It's great to be able to provide some pretty important information to the community that I love so much, of independents who go out there and make their own life and get control of their own careers. So I hope everybody's doing well, safe, doing your social distancing, which is really important, and staying safe so we can get rid of this horrible thing that we're all living through. But it is changing our world, and I actually think it's going to create more independent contractors and freelancers because people are getting comfortable knowing how to do this. But that's another story for another day. Let's go through this. I guess the website that McLean just mentioned, it's a great resource. Our team spent hours and hours and hours through the weekend and it's constantly being updated online. This law that was passed last Friday is 880 pages, extremely complex, has lots of new things into it. And what I'm going to try to focus on today are what I think are eight components of this new law that are important for you to know. And I will go through it at a high level, but close enough that you should be able to figure out how to go navigate and get to the next step. So before I do that, what you see on the screen right now is just to define who it is that we're talking to for MBO. And you may or may not know, but MBO in 2011 was the first organization to build a independent research study to really bring out to the economy, our legislators and news media, that this is a really important part of our economy and our workforce. And we have now 9 years and soon to be 10 years of data that has been over the years showing the trend of this workforce and the behaviors and why it's such an important part of our economy. Today, there's 41 million people doing this in the United States. And if we go to the next slide, it gives you a little profile of who these people are. And it's across all the different age groups. And actually, of that 41 million, there's about 15 million that are doing this on a regular, almost full-time basis, where their main income is coming from independent work or freelancing. And the actual income generated on average is about 15% higher for people that are doing this kind of work than full-time. So it's a great way for people to do work. Now, they don't just necessarily are, throughout their life doing independent contracting work. People will go in and out of this different times in their career. But it's, the people we're talking to now are the people that are really focused on this as their main livelihood or a significant part of it. So we're going to get into that. And then finally, in the next slide, if you look at the aggregate value to our economy, it's $1.3 trillion, which is about the size of the Spain entire GDP of the entire country. So the reason for this is that, for the first time, I'm actually pretty impressed that with this new CARES Act bill that was signed last Friday, there's a lot of information in there that recognizes this workforce as an important part of our economy. And it's really the first time I've seen that. And it's been years that we've been advocating for this type of worker. And I believe now that this bill is passed, I believe that's going to be opening the door for a lot of other new types of programs that are going to be around for the independent contractor, freelancer, and gig worker. So let's get into the bill. So those of you that have probably heard about this, it stands for the Coronavirus Aid, Relief, and Economic Security Act, CARES. Government always has to kind of come up with some type of marketing for their bills. So CARES is kind of a cool name for it because it is about caring for the people. I believe this is a $3 trillion bill, and with the Treasury backing up additional funds for buying securities and bonds, I think it's turning into a $7 trillion bill. And people don't really know what $1 trillion means, but it's a tremendous amount of money, and it's hard to understand it. But this bill is probably 30 to 40% of our total annual GDP for our country. It's a tremendous amount of money that's being put out there. So let's see how you can go get some of it. If you go to the next slide. Go back one more. Okay. So I'm going to talk about briefly these 8 areas that I mentioned. 4 of them about your business. Now, whether your business is a sole proprietor, 1099, you might have an S Corp, you might have a C Corp, you might actually have a couple little employees. So on the left side, that's about your business, and it's going to be about deferring some employer side taxes. It's going to talk about losses that you could carry back for a few years and get some cash now. He's going to talk about cash grants that you could actually go online and apply for and get money in 3 days. And also loans that if you do things and you could keep yourself busy or keep people busy, you could actually get the loan forgiven. So those are 4 things that are pretty innovative, and I think important for you to get access to financial support. On the right side are things that every American will have access to, and that's expanded unemployment benefits, direct cash. There's going to be money coming right to your bank account in the next couple of days. We'll talk about that. And then there's new loosening up provisions for if you have an IRA or 401k, you can get money from that you couldn't otherwise get in the past without paying penalties or having some strict repayment rules. And then, of course, tax day is no longer April 15th this year. It's extended to July 15th at this point. So we'll get into each one. We'll go through the business, the 4 business pieces first. So the way these slides are set up, just so you know, I'm not going to kind of walk every word through these slides, but on the top, you'll see that it says the section that we're referring to. So, if you jot that down, you could go deeper to really look at the actual laws. And certainly if you just Google that section 2302, you'll learn more about this. And the bullets underneath that are basically the key provisions or topics that I believe are important for you to know. And then on the right in that big gray square box is kind of the punchline, like that's where you're going to get your cash. So let me just walk through this for you. I'm sure we all know what self-employment taxes are, or employer side of Social Security. If you worked as a W-2, or you might still be working on a W-2, you know that your taxes come out of your paycheck. And those taxes, some of them are income tax withholdings, and others are to pay Social Security, Medicare. If you're a 1099 or sole proprietor or have a pass-through business, and you file your quarterly estimates, and at the end of the year, you have to file your 1040 form, and you get a Schedule C or a K1, all that goes into your tax return, and then you have to pay, as an independent contractor, self-employment tax. And self-employment tax is really the employer and the employee side, so you pay double, whereas in a W-2, the employee pays half and the employer pays the other half. What this law, in this section of this law, has done is said, at least for the balance of this year, the employer portion of the Social Security tax does not have to be paid this year. And that's about 6.2% of whatever your wages are, or for an independent contractor, whatever your profits or whatever you bring into your Schedule C. So if you're self-employed, it'll be about 50% of your self-employment tax for Social Security. If you are an employer with paying employees on a W-2, it'll be the portion of Social Security tax that you're paying as the employer. Now, that's not a freebie. You just defer it, and you could pay half of it back at the end of 2021 and the other half at the end of 2022. So this is kind of a free kind of cash advance, cash loan, no interest, that they're basically saying, don't worry about paying it this year. You could pay it over the next 2 years. So that's one form of cash deferral for you that's important for you to take advantage of immediately. Go to the next one. So the next one is a change to the tax law that's kind of bringing back to the future. In 2017, the IRS and the Congress removed net operating losses from being carried back. They've now put it back into law. And what this means is if you have a business and that you have lost money either this year, last year, or the year before, in 18, 19, or 20, you could take that loss and carry it back up to 5 years of when you might have had a profit and paid tax. And then you could get that tax back. So this is going back into the past where you had profit, and any losses you might have had over the last 2 years, and including this year, which would be 3 years, you could go back and get a refund. So that's immediate cash if you want to apply for that refund now, or certainly you could plan for it by the end of the year. And also, if you're paying quarterly estimates, you could adjust your quarterly estimates if you project that by the end of this year, you will actually not need to pay tax, or you will get a refund. So you got to talk to your accountant about that, because this gets pretty complicated. But it's important for you to know, and I think it's a way for you to either reduce your taxes or come get money back. Let's go to the third one. Next slide. So this is very new in the way it's being applied. So here is a low interest loan, and actually more importantly, it's actually could be a grant. It's called an emergency EIDL grant, and EIDL stands for Economic Injury Disaster Loans. And these have been around for a long time, but they've been applied for like hurricanes, earthquakes, floods, where there's a disaster. And the Small Business Administration of our government sends out money to help people that have been injured economically due to the disaster. Since this coronavirus is now a national disaster and declared that way, every geographic area is considered a disaster. So the SBA is saying, you could go on our site at sba.gov, or that little website on the bottom right there that says covid19relief.sba.gov. And there's a questionnaire there that'll probably take you 10 minutes or so to complete. And you could either get a loan to cover any economic injury you've had, and that loan is paid back over multiple years at a very low interest rate. And then if you need money immediately and you can justify that, and you need to sign an affidavit that says, you're not lying, that you need it, but it's only based on your credit score. So it's a very quick process, and they guarantee the money within 3 days, and you could claim up to $10,000. A lot of people are looking into this program. I think it's something that you really do need to be able to show that you've gotten either lost projects or you have some other reasons that I know someone that is in the construction business, and they had to stop construction certainly on their projects, and that actually caused damage to the property with rain and with other things. So this is designed to give business relief for economic injury as a result of this COVID-19 pandemic. So that's an important one. Go to sba.gov and you can learn more about it. Actually, on our site, you can learn more about it. So let's go to the fourth one, the next slide. And this is really a brand new by the SBA, but it's administered through your bank. So if you're interested in this one, you need to go to a lender, a bank that is part of the SBA lending network, and there's a whole list of them on their sba.gov site. And what this is the Paycheck Protection Program, and it's actually available to independent contractors. So even though you don't get a paycheck, you're still able to get this. And basically what it is it's to keep you billing, or to keep your employees employed, or to keep independent contractors paid by whoever their clients are. And what it does is it goes back and it looks back a year ago, and it tells a company for your business, what was your average payroll last year per month? So it goes and it has a formula that goes and calculates what your average monthly payroll was a year ago. And then it says, okay, take 2.5 times that. So let's take an example. If your average monthly payroll was $10,000 2 years ago, you could get a loan for $25,000. Then it says, for 8 weeks from the time they give you this loan, if you maintain that level of payroll, so you're keeping people busy or yourself busy, they will forgive that loan so you don't have to pay it back. If it drops a proportionate amount, it will forgive that proportion, and then the rest you pay back over time. So this is a brand new program. You're going to hear a lot about it if you've been watching any of the news shows or seeing any of the links online. It's called the Paycheck Protection Program, Section 1102 and 1106. You can get the loan. You could pay it back over time if you maintain a level of production. If you're paying people or for yourself, you could get it forgiven. And by the way, when it is forgiven, you don't have to pay tax on it. So it's really free money. It's cash. So those are the 4 things for your business, right? So deferring that Social Security tax, having these the EIDL loan, having this payroll protection program loan, and the net loss carrybacks. So those are things for your business as an independent contractor, sole proprietor, small company. Those are the things you should pay attention to really quick. I would say, if you haven't already, when you're done with this in the next 40 minutes, go do this. It's important, and the money's out there. Our government wants to get it in your hands as quickly as possible. So now let's go through what happens, in the case where you're totally, part of these unfortunate people that are unemployed. And actually this morning they released the unemployment numbers, and it was another 6 million people this week over, in addition to the 3.5 million people. So there's 10 million people in America right now unemployed, which is amazing. And I think Goldman Sachs predicted there'll be 47 million people unemployed over the next couple of months. So there's a huge effort to expand unemployment benefits. And if we go to the next slide, I'll explain what they are. So for the first time ever, unemployment is now available to independent contractors and freelancers. And there's been a few new things added to basic unemployment. First of all, what you should know is unemployment is always administered by your state. It's funded by the federal government, but it's administered and given out by the state. So every state's a little different, and you need to go check with your state to understand the details of how they're implementing the distribution of these funds. But I will tell you what the CARES Act is basically funding the states with. One is pandemic unemployment assistance. And this basically changes the rules to say add self-employed and gig workers to be able to claim unemployment benefits. It also extends the waiting period, or removes the waiting period, I'm sorry. It used to be you have to wait a week or two before you could collect benefits. You can now start accruing your unemployment benefits the day you apply. So if you are out of work, apply immediately, and you may not get your money right away, but you'll start accruing the benefits. In addition to that, each state generally has their unemployment funding calculated at 50% of what your weekly wages or earnings are. And then there's a cap. And I would say in general, that cap is about $400 a week. Some states it's a little higher, some states it's a little lower. What the government has done, Treasury Department has done, was said, whatever your state is providing you, we're going to add another $600 and have the state send that to you, at least for 4 months from the day you start claiming unemployment benefits. So that means if you take the $400 plus the $600, you'd get $1,000 per week for 4 months. And then the rest of the year, it drops back to the state of $400, because this now also extends unemployment benefits beyond what's normally 6 months. It extends it through the rest of the year. So this is really a lot of help that is available to the millions and millions and millions of people that will be unemployed. The last part about this bill, which is quite interesting, is they actually have this thing called short-term compensation. which is going to be interesting to see how they implement it. But if you're partially reduced your work, they will figure out how to give you a portion back. And I'm not sure exactly how the states are going to do this, but my understanding from looking at a couple of them is they're going to say you could get up to 125% of what the cap is. So in the example I just gave you, the cap plus the 600 is $1,000. I think they will say if you're earning some money in addition to what we're giving you, the total could be 125% of that, or about $1,250. So I'm not sure how that's going to work, but apparently you don't. If you're an independent contractor and you have 5 or 10 gigs and you lost 4 of them, you still could go get unemployment to help you get to where you're going to get, as long as your remaining gigs aren't 125% of what unemployment would give you. And I know that's complicated stuff, but again, every state's different. But there's a great set of benefits. Go to your state and learn about them. And then there's 3 more that we want to go through. If you go to the next slide, these are things that every American will get, whether you're unemployed or you have a business. So let's go to the next one. Here is cash coming from the sky. You will get these checks, or you'll see them in your bank account in the next few days. These are direct rebates from the government just to give you money to help. And however, there's limitations. So if your adjusted gross income on your tax return from 2018, or if you did file a tax return in 2019, they will use that number. But the adjusted gross income line on your 1040 federal return, if that's $75,000 or under, if you're a single filer, you will get $1,200. If you file and you're married and you file joint, it's double that, or $150,000. So if your adjusted income on a married filing is $150,000, you will get $2,400, $1,200 each. In addition to that, you get $500 for every child that's 17 years and younger. Now, that's wonderful. Now, they don't want to give money to people that make a lot of money. So there's a cap. So on a prorata basis, if you're an individual, it goes from 75 to 99,000. Anything over 99,000, you don't get anything. And for married, it's double that, or 198,000. And there's a formula that reduces the total amount that you're going to get based on how much you are over that $150,000 or $75,000 if you're individual. And then if you're head of household, that's another way of filing. There's a couple of other numbers, but it's all the same concept. So, and if you're an independent contractor and you also have W-2 income, they both end up on your adjusted gross income, so it doesn't matter. It all comes together. So that's $1,200 and $500 per child for those people that qualify on those income levels. So that's pretty good. And then the next item is if you have a retirement account, an IRA or 401k, they loosened up the rules for you to be able to get access to that money. If you are unfortunate where you actually have either been diagnosed with the COVID-19, or your spouse or a dependent, or you're taking care of someone, you are allowed to take up to $100,000 out of your retirement account with no penalty. There used to be a 10% penalty, and you don't have to pay it back for 3 years, or you could just pay the tax on it over 3 years. So it's a way for you to get some immediate cash. If you are fortunate enough to not have been impacted, or have a loved one or someone you're caring for impacted by this terrible thing, you still could take money out of your 401k, but in that way, it's a loan. So you have to pay it back. You'll have 6 years to pay it back, and you could take up to $100,000 instead of $50,000, which is what it used to be. And anybody that has a current loan on their 401k or IRA does not have to pay it back right now. So you get 6 years. There's $100,000 that's available to people that have that kind of money in their retirement account. And then finally, the last one for that I think everybody probably knows already is tax day is no longer April 15th, it's July 15th. And if you have quarterly taxes, that's still due upon when it's supposed to be due. But remember all those other things we just talked about that would probably reduce your income tax, and therefore you probably want to adjust your quarterly tax payments. So that's it. So those are the 4 things other than business, right? So you get tax day deferral, you could take money out of your retirement account, you're going to get cash coming in from the sky, and if you're unfortunate where you're out of work, you get unemployment benefits. So Emily, I'm going to stop there, and please, if there's questions, I'd love to answer them. Still have some time left.
This was awesome. Thank you so much for spending some time doing this. I know you guys have done a few of your own webinars and been trying to get this information out as quickly as possible. We did have a couple of questions and we've spent some time trying to answer those while you're going through stuff. But like David says, if I file for unemployment, that will preclude me from applying for the PPP. Is that correct?
No. So if he is a independent contractor and is out of work, he certainly could collect unemployment. Now, if it's just him, he could still get the loan. He won't get it forgiven, but you could get the loan based on last year, and you can't double dip. So you can't go get the $10,000 grant and also the PPP and also unemployment all for the same. But depending on the extent of your losses, you could stack them on top of one another. So, I would, it's a very low interest rate loan. Depending on what your business is, you may need the money. But it is a loan that's calculated based on last year, 2.5 times your monthly payroll. And that's a loan available to you, as well as the EIDL loan, which is also available to you. So if you need cash, it's out there.
So he says he's an S Corp with no other employees. And so I know you talked about it a little bit, but for those of us that are, freelance business owners and we don't have employees, we have, we bring on other freelancers to help us out throughout the year. Mm-hmm. How does that work with this? It was a little unclear. And I think that's probably David's question too.
Okay. So if you're an S Corp without employees, if you're paying yourself a salary, which you're technically supposed to be doing as an S Corp, you could defer half of the Social Security tax that you've been paying, depositing. So that's one benefit. If you're paying independent contractors, because you don't have employees, but you're paying other freelancers, they count towards the loan so that you can get. So that's a benefit. So if last year you were paying independent contractors, that counts towards that 2.5 times monthly payroll. And then if you continue paying them now, that could be forgiven. So it's, independent contractors are considered part of payroll, including your own income. So it's there's a lot of ways to do this. Now, if you're an S Corp and you're taking a distribution instead of salary, then you cannot count that towards payroll, and you do not get the Social Security tax benefit because you haven't been paying on it. So hopefully that helps clear it up a little bit.
Yeah, it definitely helped me quite a bit more. There was a couple of more from earlier. I know Carrie asked about, we did, give some answers for this, but she was wondering if there'd be a Q&A about specifics for calculating payroll for the PPP. Carrie, if you want to give us any more specifics about that question.
Well, while she's doing that, I could say, so payroll is, and there's a specific definition, which is on our site, but in general, it's whatever you paid employees. So let's go back to figure out last year, right? So last year, you're going to come up with the average of, on a particular month. So, you could add your payroll to your employees, whatever benefits you paid them, whatever you paid independent contractors for doing work. Now, there is a cap of $100,000 per person. So you can't count employees that are making over $100,000. You could count them up to $100,000 annually. So whatever that comes out to per month, $8,000 or so a month. So, you can't start, applying that. So basically this whole thing is anybody that's making over $100,000 is not going to get as much of a benefit. Okay. So,
right.
So you calculate your payroll for last year, you take 2.5 times the average month. And then for this year, as soon as you get that loan, if you could maintain at least that level or higher, you get to not have to pay the loan back. But you still get to keep the money and pay it off later if you if you don't do that. So it's not that you still can get the loan, is my point. As the question is, forgiveness of the loan is going to be based on retaining employees and retaining work.
Awesome. I think that pretty much covers the questions that we had. I know we were, like I said, we were answering stuff in the background, and you were going along. This was a lot to take care of. I was actually surprised between making sure that I got everything clicked for you and listening to you, and I just love how much you guys have put into finding these answers. So, do we expect some changes to be coming down the road for this? Additional stuff or idiosyncrasies to be addressed? How will that information be disseminated? Do you know?
They're laying the tracks on the train as it's going, right?
Yeah.
I would say that the Paycheck protection program is being administered by local banks, and they're going to give a lot of authority to the bank. So it's going to be, if you have a local banker, go talk to them. They're trying to figure this out right now. The states are going to be overwhelmed. They're getting a surge of people collecting, wanting unemployment. In addition to that, they have to, for the first time, figure out, how do I apply unemployment to gig workers and freelancers? Yeah. And they got this other $600 they got to add. So I would think the states are going to be backed up for a while. But I tell you, the EIDL, the SBA site has really been going well. And I think, every day you're going to, see more and more of this getting a little bit more clarity. And I think that there's going to be another phase of this. There's going to be a phase 4, which they're already starting to talk about. So this is, by the way, this CARES Act was phase 3. There was $8 billion done in early March, and then there was another act for families for medical leave that was done in mid-March, and then this was the end of March. And there's going to be another one coming right after, like late April.
I know you and quite a few other people out there have been really trying to do some work in this space to get gig workers, like you said in the very beginning of this, to get gig workers, independent consultants, contractors, just to even get us on the table when these kinds of conversations happen. So, I mean, this was not the situation in which we wanted it to happen, but it looks like we may have actually made a lot of progress in the world of, freelancing and independent workers because of it. Is that true?
Yeah, I mean, listen, it's pretty impressive to see that our government recognized this as an important part of our workforce. And I think the reason why they have is because they understand there's a lot of economic activity generated by this group of people. Right. And I think economics, kind of take precedent over everything else at this point. So, the whole, technical, political, whatever you want to call it, employee versus independent contractor, that whole thing is still a mess, right? AB5, how do you determine worker classification? That's still going to be, blurry. But I think for the first time now, we have a law that treats independent contractors and freelancers as a constituency that is important to our economy. And I think that's a big win.
Huge. Yeah. So a couple things that's clarified. Dave came back with, just to clarify, my accountant has me on payroll as the only employee. And he's wondering, what is the difference between distribution and salary?
Okay. So salary is you're paying yourself a salary, right? So And when you pay yourself a salary, you with your tax every time you get a paycheck, taxes are withheld and sent to the government, and you are also paying payroll tax. So as an individual that is paying themselves on a salary, you're paying the company is paying the employer side of that Social Security tax and Medicare, and then the employee, which is you, when you put your employee hat on, is paying the other side of Social Security and Medicare. And that happens every time you get a paycheck. On a distribution, you don't pay payroll tax. A distribution, you just pay income tax. There's two taxes, right? There's payroll tax, which is Social Security and Medicare, and then there's income tax, which everybody pays based on how much income you earn. A distribution, you don't pay any payroll tax on it. So, because a distribution is really supposed to be profit of your business as opposed to wages or earnings or services that you deliver. So technically the IRS says you could only take a distribution that's above and beyond what you're normally should be paying yourself as a wage. You're supposed to pay yourself a fair wage. So if I'm a consultant and I have my own S corporation and I bill $100,000 a year, and I take that $100,000 as, or let me say I take $80,000 as a distribution and only pay myself $20,000 as a salary, the government says that's illegal. The government says that unless you can replace yourself for $20,000, you should be paying payroll tax on the entire amount, or at least the amount that would be fair wage. So that's why you don't get the benefit as a distribution now, because you really didn't pay payroll tax on it.
That makes sense. And then Carrie came back with, so an S Corp, I can take what I paid my 1099s and what I paid myself in payroll, but not what I took as a disbursement or distribution. Sounds like that's correct.
I believe that's correct.
And then one more, Anja Yamaji. I'm sorry if I mispronounced that. What am I supposed to fill out online when I apply for unemployment benefits? They asked me for my last employer info, and it's confusing me. The online system is not set up for us yet, is what I'm thinking.
No. This is so current for me. Anyway, we're working with a couple of states right now. At MBO, we work with a lot of governments and large enterprises, and one of our large enterprise clients, who's a big consulting firm, is doing work with the states to figure out how do we change the forms to be independent contractor friendly,
right?
Employee, and they have no clue. These states don't have a clue about it. It's really, it's like a big deal, right? They've been for years been asking. I mean, Anja, your question is totally on point, and I'm concerned that the states aren't going to be able to figure this out quickly enough, and I don't know what's going to happen. But the answer to your question is, do the best you can. Say your employer is you. Say, just come up, just put whatever numbers you can put in there, so you can start getting benefits. They do not have this figured out yet, at least the states that I'm aware of.
Yeah, I guess put your own company name in there.
Yeah, you're just gonna have to wing it. They don't know. They don't know what to do with this.
All right, so maybe we can get back together here in a few weeks or a month. If you guys get any direction on how states are possibly going to be handling this, it might be worth getting on and doing another Q&A if you're up for it.
Yeah, we hope to find out.
Yeah. All right, now I'll let you know if I hear anything. I'll try to do my best to help cover Texas and fill you guys in when I find it.
Terrific.
All right. Again, thank you so much, Gene. I know you guys have something here in about 10 or 15 minutes, so I want to make sure you have a gap to get to that next thing and give them everything you got. You've been so very helpful. Wait, Carrie has one more thing real quick, and then I promise we're going to cut this off. Sorry about all the questions. She said, I paid myself more in 2019 than in 2018. Would it be beneficial for me to wait until she's submitted her 2019 taxes?
Let me think about that for a second. So,
because I thought we were looking back at 2019, even if we've not done taxes.
Actually, I would say no, because here, if you're looking for the Paycheck Protection Program, You want to go last year to calculate your monthly payroll, multiply it by 2.5. And then for this year, if you're able to keep that amount or more, you get to forgive that. So yes, it will make the loan smaller if you base it on last year, but assuming you could, then you have a lower bar to maintain
Threshold, yeah.
year, which means you then could get the money for free. Now, you got to look at the exact numbers, but I would say you want to be careful about that. You want to look at that carefully.
Yeah. So if I understand correctly, though, real quick, you do not have to have already put in your 2019 taxes in order to calculate. Okay. No. I think that was the stickler.
Yeah. And even for the adjusted gross income for the rebates, if 18 was a lesser year, that would be better for you to be in the lower number to get the full rebate if you're below the 75,000 or 150,000.
Gotcha. All right. Well, thanks again, Jean. I'm going to let you go. Like I said, I know you guys have somewhere to be, and thank you, McLean. I know you're in the background helping us out with all this. So thanks. And let's, like I said, let's touch base over the next couple of weeks and see how things are progressing. And if it makes sense to do another Q&A, I would appreciate it.
Thank you, Emily. This is always great to be with you. You're doing a great job for getting information out there. I appreciate it. Thank you.
Thanks a lot. Bye, Jean.
Bye-bye.
All right, everybody, we're going to close this down. And I know there's a lot of information in there. And so if you still have questions or you're watching this later, make sure that you go ahead and put those questions in there. I'll be watching for those questions, and I'll reach out to McLean. I'll reach out to Jean and make sure we get those things answered for you. And if it's something that's really long and we need to maybe email back and forth, you can always find me at, freelanceconference.com or emilyleach.com and shoot me an email and ask those questions specific and get that stuff done. So anyway, thank you guys so much for showing up and for asking your questions so that we could all get some more clarity on this CARES Act. And I'm going to continue to work with McLean and work with Jean and see if we need to do another Q&A anytime soon. McLean, are you still out there?
Hi, thank you guys so much for what you did today. Really appreciate everybody joining in, and caresforindependence.com will have the latest. If you subscribe, we'll send you updates. And of course, we'll rely on great friends like Emily to help get the word out too. So thank you so much for everybody taking the time today.
Thank you guys the most for all the time that you guys have put into this. Like you said yesterday when we were chatting, this got signed on Friday afternoon, late afternoon. And you guys,
yeah, we all need to get a little sleep.
Yeah, so
right now.
Actually,
we'll do what we can. We're trying to help everybody here.
Let's go get some sleep, and we'll chat early next week and see what we've learned from between now and then. Again, thank you guys so much.
Bye, guys. Thanks so much.
Bye.